Hello, future professional traders and future millionaires. It's Angels FX with you, and today in session 3, we are going to talk about an imbalance and why it's important. An imbalance happens when a market exchange receives too many of one kind of order, buy, sell, and limit orders, and there are not enough counterpoints orders, okay? A bullish imbalance has more buyers behind it, and bearish imbalance has more sellers behind it. Imbalances are caused by an institution to manipulate price. After manipulating the prices, they make a profit from this level. So they need to manipulate the markets, and that's why the rapid moves and the rapid quick moves happen, because they are manipulating prices and they want to make profit. When we are looking at imbalances, we notice that candle wicks don't meet, and price tends to return as these areas to fill this available imbalance, to fill inefficiency in the market. How to spot an imbalance in bullish trend? So look at this. Where is my cursor? Here. We have this last week, okay? And here, third candle week. So we have this first candle week and third candle week here, okay? So look, this gap between these two weeks called imbalance. So that means that in market we have imbalance. Look at this right now. Look at this week right now, okay? And another one. There is no gap. Why? There is no gap literally. Here was gap in a graph, you can say. We have an imbalance here because there is a gap. Here, these weeks does not, like, weeks meet each other, okay? So that's why we don't have a gap. That's called efficient price, okay? So there is no imbalance. How to spot an imbalance in bearish trend? Here is an example. So we have this week when we are when we want to spot like imbalance in bearish trend, we should look at the first candles down week and third candles up week. Okay, look, we have this week and this week. There is a gap. Why? Because the week doesn't meet each other. So that's why we have this kind of gap, and this gap is called imbalance. Some people call it a fair value gap. I think, yeah, fair value gap, and also a inefficiency. Okay, do we have imbalance here? No. Why? Because the wicks meet each other and they have no gap available. Look, we have these first candles down week here and third candles up week up here, okay? So we don't have gap. You should look at these weeks to spot an imbalance. This is bearish imbalance chart example. Look at this right now. We have this week here and this week here. So this is our extreme imbalance, okay? Available. Price have returned to the zone to fill an imbalance. Always, like, imbalance is like guys, like, imagine imbalance is just like the magnet, okay? It magnets the price, and price always tends to fill this inefficiency in the market. Why? Because institutions and large orders are behind it. So that's really why the imbalance needs to be filled. This is bullish imbalance chart example. We can see here we have this huge gap, huge imbalance. Why? This is our week, and here this first candles week. Look at this gap. What have price done? Price went up, and then, just like the magnet, the imbalance was filled, okay, by this move. So where is our imbalance? Correct, from here to here. Why? Because we have this week here. This is our first candle week, and this is our third candle week. So when we are in bearish trend and we want to look at bearish imbalance, we should look for first candles down week and third candles up week. Okay, so this is our imbalance. What have price have done? Price broke here and price filled this imbalance, this inefficiency in the market. Okay, so you could enter from here at this order block as we talked about it. So this is our supply, this is our entry stop, and as our take profit here. Why? Because we have our, sorry guys, our gap right here. So here, okay, what price have done? Felt this gap and bull gave us reaction. So here, another one. Let's delete everything. Let's delete everything. This is our order block as we know. But where is our imbalance? Look, here, this is our first candle weak and third candle weak. Look, price did not fill. It was fake fill. So this is our true and valid imbalance. I mark imbalance just like this. If you want imbalance, let's delete this. So we have this imbalance right here. From this week to this week, there is a gap, okay? So this gap is called imbalance. So where we would enter just like this. Boom. And where is our take profit? Our take profit would be here at this gap, at this extreme gap, okay? So where is our imbalance? From here to here, okay? We also have, just I will mark just like this, okay? We also have gaps here. This is our gap, okay? So we have these gaps, these imbalances here. Where is our order block? Here. Look, price filled this imbalance and gave us nice reaction from this imbalance. So look, quick reaction after filling the imbalance. Okay, let's delay this. Let's do one more. Where is our imbalance? From here to here. But this was some kind of field, but we have this imbalance available. Look, originally this was our gap. Like if I return price here, okay? So this is our gap from here, from this week, as you can see, to this week, okay? But price fell 80%, I think. So let's return here. Look, so we have this imbalance available right now because we still have gap in the market. So this is our gap, okay? This is our gap. This is our imbalance. Where is our order block? Here, correct. So this is our supply. Calculate this one. Boom. Entry price here, and our stops, our sorry, our take profit will be here. Why? Because we have this another imbalance here from this week to this week, okay? From the first candles, let's zoom, from first candles week to third candles down week. So this is our imbalance. This is our gap. Look at this gap, okay? So this is our gap. Let's mark white and so this is our gap. So our take profit would be at these gaps, okay, or at this order block, because we have imbalance. So when we have imbalance, what we know, price like imbalance acts just like the magnet. So price will fill these areas. Look, another entry. You could enter from here because you had imbalance. Our entry would be here. Let's mark this as our demand zone. Demand. And where would be our take profit? Correct. Here, because we have no, sorry, we don't have any gap here, but we have our supply. The price gave us nice reaction to the supply. Again, where is our another gap here? We have from this gap to this gap. This is our gap. This is our imbalance from this week to this week. So what price have done? Broke this structure here and gave us nice reaction from this order block. Look, you would enter here. Okay, if you want to enter from here, and you can also look for the higher time frame imbalances, just like let's start from here, maybe here. Look, we seen this huge leg, this rapid move. So where is our extreme imbalance? Here. Let's mark just like this. From this gap, sorry, from this week to this week is our imbalance, and this is our order book. Okay, we have also, where is our another gaps here? This, there is no gap here. Why? Because this gap, these weeks meet each other and there is no gap available. But upside we have another gap from this week to this week. This is our imbalance. This gap is our imbalance. Another one from this week to this week. This area is our imbalance. But sorry, like for example, from this week to this week, there is no gap, so we have no imbalance here. But we have imbalance upside from this week to this third week. Look, price gave us nice reaction from this imbalance. Boom, boom, boom. Touched it and like rocketed. We also have imbalance here from this week to this week. So these are our imbalances. So we know that when we have imbalances in market, price tends to return here. So this is a higher time frame imbalances, maybe daily on daily chart. Let's see. I'll extend this to the right. Okay, look, price, and this was our entry, I think, our trade. Like for example, here it respected this one. Look, you could take partials 1 to 17, crazy, crazy, on 5 September, like in 27 days. So 70 RR. Look, it's crazy, it's amazing. This imbalance acted just like the magnet. Okay, look, just felt the imbalance and gave us nice reaction. And people will say trading is gambling and some other shit. Okay, sorry for this word, but I had to say. So in market, nothing happens accidentally. Everything happens logically, and you should see these logics. You should know why price gives these moves. Okay, look, it did not happen accidentally. It happened because we know how the price moves and where the price is more likely to react from and move from. Another one, look, where is our imbalance from this week to this week? Where is our order block? Here. Look, we had this imbalance, price needs to fill this one. Boom, you would entry here, and our take profit would be here at this supply order block. Why? Because we have this imbalance here from this week to this week. We have gap. Look at this. There is a gap, nice gap. So this is our imbalance. So I would mark imbalance just like this. Imbalance. Easy. I hope you understand what the imbalance is and how to spot them. If you have any questions, you can DM me or you can rewatch the video and write down the notes, okay, from this video and from the presentations. Thank you for listening and good luck and wish you all the best. Love you guys. You are future traders, future professional traders, future millionaires. Don't forget that.